All right, yeah, I should be the only person in here. Mm. All right, so everybody should be able to hear me. Let me make sure. Yeah, the sound cool. Over there to the YouTube right now. We are live. I'm gonna just let everybody know we're live. You can go ahead and hit this here. We are live on YouTube right now. You can go ahead and join in. Boom. Everybody should be able to see. Everybody should be able to see and hear on YouTube, and everyone should be able to see and hear as well. So if you are, roll, join me now. A good thing. Yeah, right. So cool. So I see a lot of ton of people joining over there on the YouTube. We still got some people here. Name, email number, send me your name, email number for anybody that's on the live right now. We are on YouTube as well. So everybody switching over to YouTube. We'll give everybody a few moments. You could tap in with me over there. Join me live on YouTube. All right, so we're gonna get into this. So first things first, you see the title of the live here today. This live is being recorded and will be saved. To me, why everything isn't about options only. Right, so I wanted to have this conversation. I actually had it privately with a couple people last week. And I just realized like there's like a lot of times this craze, like everything doesn't have to, in my opinion, everything doesn't have to be about an option particular play. Now I think back to when I first got started, you didn't have the capabilities of having so many leverage instruments, right? So like now you have the opportunity to be able to get certain stock, with these different leverage products pretty much very, very, very cheap and easy, right? So you don't even need to necessarily use options a ton, right? You can, like options is great, but I also think that, it's also super, super duper important to speak about both sides of options trading. I think a lot of times we speak about the buy side, but we don't get the opportunity as well to also speak about the sell side. Also think about when you are thinking, when you are wanting to sell options, I think selling options is one of the greatest ways to actually trade, right? Now, it takes, of course, the ability to have the capital, have the positions and the shares. It's not maybe the place where most people start off at. And, if you're a newbie starting off with something smaller, understandable. But I do think if you're in a position where you have a nice sizable abundance of capital, I do think selling options is a really great way for you to go about it. Like selling options pieces, to me, one of the best ways to be able to actually get involved in the market as well too. So I think there's always two sides to every story, but I think only one side gets enough coverage. So that's why I wanted to do this live really here today to speak about as well the selling side, and then to just really highlight like options doesn't have to be the end all be all. You can do more than that, right? There's a ton of ways, other ways that you can actually make money in the market and not actually have to even use an options contract, right? Options are great leverage, right? We use options all the time, and that's perfectly fine. But it's also good to diversify your strategy as well, and never to me lose sight on the long term sight, because we see a lot of times that there's companies and tickers that we can get a hold of, relatively at good and fair prices, that these things, end up 5x and 10x and 15x and 20x right over a period of time. So there's been a lot of great names, that have came into the marketplace and that we've actually seen, move up here to the upside. So something that, like I said, something that I actually wanted to make note of, and wanted to bring everybody here to today, this morning, to actually go ahead and cover. So I wanted to see, do we have any questions before I get anything kicked off? Drop a comment in the chat if you can hear me on YouTube, if you can hear me on the tube. Drop a comment in the chat for me. All right. Drop a comment in the chat for me. If you can hear me on the YouTube, tap in with me. The tube comments. Here we go. YouTube, tap in with me. YouTube, YouTube comments. You can go ahead and hear me. Love to be able to hear from you guys. See real quick. Mm-mm-mm. Questions, 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 questions. Mm-mm-mm. Yep. All right, cool. I just want to make sure everybody can hear. If you guys can go ahead and join if you are on this YouTube. I mean, if you are on the IG, if you are trying to get, we are live on YouTube over here. Go ahead and join me on YouTube so you can actually see my screen. Right, cool. Yeah, we already did the watch list for anybody that's asking me about the watch list. That was the purpose of me cutting the Zoom, was so that watch list could just be where it's at. So yeah, we already did the watch list, so that's already done. Just wanted to make note of that so everyone does know. Okay. Want to share something over here real quick. It's about to come over right now. Right. So first thing. So like this was, for example, this was like my Christmas wish list type thing. So these are like prices that for Christmas, you know, these would be like our wish list. But also these would be things that you could also, for someone that you care about, appreciate, you can actually go ahead and this down for you to actually go ahead and use for yourself. So this was the purpose of that, was to have a wish list for people, right? So these are like your wish list prices for you to actually go ahead and have, right? Now, some prices may be near, some may not be, right? For example, Palantir is nowhere near, Kano is nowhere near right now. But even you could take these notes and actually go ahead and have this. I see some questions in the chat. So we'll get those here in a second when I finish. Right. So Palantir, $100 to $200, that is $100 to $120. That's a wish list type price. SMCI, $17 to $22. That is the price, a wish list type price. Uber, 70 to 75. Funny enough, Uber's been kind of selling off. You also have ticker Coinbase with the same levels, AMD, right? AMD, which is at 120 to 140. It's your wish list type price on AMD. Netflix, 80 to $86. Currently, Netflix is at 95 bucks. Right. So these are all, main players that, we have spoken about here before, over and over again. Um, so this is what I'll say, right? Now you look at Oracle, 140 to 160. And you have METU, which hell, we got the $25 price, but it could go back there, right? That 20 to $25 range to me is a perfect place to get METU, which is the 2X lever ETF of Meta. Oracle, which we didn't get an opportunity to cover on the watch list, but Oracle, we spoke on them yesterday. You know, Oracle definitely can pull back down to roughly around 140 to 160. Do 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 do. Any questions on that? So this is my stock market list, Christmas list. These are your wish list type prices that you can actually go ahead and pick up. So, like I said, NFLX is already pretty much almost giving you the level that you should be looking for at this time on this company. So, NFLX is giving you the areas and the levels that you will want to pay attention and watch out for. So, NFLX is already giving you those levels and giving you those spots. Yep. These are just long-term investment prices, guys. Strictly long-term investment prices. So, we told people pretty much here clearly plain as day. Netflix just came down here to 80, $86, right? That's the price that you want to get it at. MSTY, which is Misty, you want to get that name roughly, you know, you want to go ahead and get that name at $4 to $5, right? So $4 to $5 is roughly where you want to get that stock at specifically. Yep. Those are my thoughts at this time here on Kano. So a lot of these, once again, when you pay attention to them, these are the things you should be shopping for what's today? What's today? 13, well, 14. Yesterday was 13. 14th. You got 11 days left, right? I'm gonna, go out yesterday. I seen a ton of people, loaded, right? Like a ton of people want actually to be able to just blow money on things. These are the things that you should actually be putting your money investing in. Right. So you got Palantir, SMCI, Uber, NVO. Please stop asking me about NVO if you're not going to listen to what I'm saying. Every week I get asked about NVO, and we say the same things over and over again. This is an accumulation play on NVO, right? So you don't always, see things shoot straight up. What about NVO? What is it doing? NVO is in the same spot it's been in for the past few months. But when you look at the valuation, this is why I say, to me, options are not everything. I say that because people get caught up in options and thinking that everything is always going to be super easy, right? Everyone gets caught up in, oh my gosh, this stock is just going to keep running. And, I just want to make quick money instead of focusing on the long term factor, right? Focus on the long term factors of you don't have to chase the market. I think sometimes people are chasing the market and are thinking that they have to, make $1 million tomorrow. And it's just not, unrealistic and, putting way too much pressure on yourself. So what I'm saying to you guys here today is like, yo, just focus on, getting solid companies at solid prices. So for example, in my class tonight, and over the next couple of days, we are going to do fundamental analysis talk, right? And we are going to, when we do this fundamental analysis talk, right, we need to make sure that we have these conversations about getting things at great prices. That's the biggest thing that we focus on is getting things at great prices. So I want to walk through a couple of different examples here this morning, right? So let's say Netflix, right? Let's come to Netflix. This is going to be our first example for today. So Netflix, lo and behold, is at 94 bucks. If you've been following me, if you go back and check my page, we spoke on Netflix numerous of times coming here to this downside. Boom. But now how do you take advantage of it? How do you actually get, this is where we'll answer some of the questions as well, too. Let me see some of these questions. When you sell an option through swab and take money out, how are the taxes? So it's not about taking money out. I want to dispel that myth too. You get taxed regardless of whether you ever withdraw from the brokerage account or not. You get taxed on the actual event of you selling a position. So trading options, it all falls under. It's all going to fall under the same tax. It's not a different tax just because you sold an option versus buying an option. You're creating a taxable event when you do take in a transaction. So when that position closes, that's a taxable event. So you're not getting taxed on withdrawing money from your brokerage account. You get taxed on the actual realized gains, right? Or you get taxed on those, right? The realized gains are real. That's what you get taxed on, right? The real when you realize something in your account, you are getting taxed on that, right? So once you buy an option and decide on an expiration date, can you sell before to either save profits? Correct. Yep. So you can sell always before expiration date. You never have to wait until expiration day. You can always sell. You can sell same day. You never have to wait never have to wait. So that's an important note and point to make. Good questions that are being asked, right? So I'm glad that both of those questions are being asked. So no, you don't have to wait until expiration date. What I want you guys to do that are here on YouTube this morning and that are here on this live, the information I'm giving you guys right now is bona fide. What I want you guys to do is like seriously take notes on the things that I'm saying because I'm giving you guys a blueprint. I'm about to use Netflix as just an example, but you can do what I'm about to tell you next with any ticker that you have long-term interest with, right? And for those that are within my community, you guys will get the full scope of things tonight. So I hope that everyone who is not inside the community, I'm going to tell you this now. Hope that everyone that's not inside the community joins the community today to get access into the next 3 classes. We had our first preliminary beginner class yesterday, but we're going to separate the people that say they really want it versus the people that's just talking about it. Because if you're just talking about it, there's going to be a lot of things that distract you. But if you show up for class, if you watch, even if you can't make it, there's a recording. If you show up to watch the recordings at your own time, that is where you're going to be able to benefit. Everyone says, hey, I want to be a trader or I want to make money. But very little do people, because I guess it's so glamorized and people tell people it's so easy, and it's not easy. It actually takes dedication, hard work. It takes a lot of time studying, as well, studying this information over and over again. Nothing to me about trading is easy or anything that I feel as if I should glamorize, right? Like this is nothing that I would actually go ahead and glamorize, right? So none of this stuff to me, in my opinion, is easy. And through many of wins, many of losses that I've actually taken, you get a level of experience to learn what to do and what not to do, what to do and what not to do. So we are live right now. I want you to share this YouTube live with as many people as possible for me. The more we share, the more I can give. All right. Just the reality. The more we share, the more I can give. All right. So those are just my thoughts here this morning. All right. So let's keep this party rolling. You got Netflix. Let's use this example, right? So let's say you've identified, you've taken a look at Netflix and you say, all right, I want to get Netflix long term, but I also want to make the right decision on where I buy, right? So many times when new people come into the investment space, they buy in the wrong places, right? So we go through these cycles of, market goes back to all-time highs. Everyone comes in and, everybody's, oh my gosh, I want to make money. And then everybody says, okay, market's at an all-time high. But I want you to guys look at something, right? Like in Netflix, the existence of Netflix's stock, right? How many times have you really seen Netflix actually move down? Right? Just ask yourself this question. How many times have you really seen Netflix have really any major selling, right? So just to show you the entire existence of it, you got one point here, 2013. You got another point here, essentially a little more so sideways action from 2018 to 2020. Right? They were in heavy spend mode at that time, for those that don't know. And then, of course, in 2021, they dropped from $700 to 150 bucks. Now going from 150 to almost 1,500, pretty crazy, right? But now they've pulled back from about that 13, 1400 point that they were at. And now they're at 95 bucks. So Netflix has had less pullbacks than I can count on one hand. Just to keep that into perspective, right? Just put that into perspective for yourself. So once again, this is a ticker that you actually want to get long term. You want to get involved in it, and you want to try to pay the right price for this name. Now, after any major run up, right, when you see something in 3 years go essentially from 150 bucks to almost hitting $1,500, having to do a split because they broke over $1,000 a share, just keep that in your mind and your perspective. This is a name, once again, that flew sky high, right? So we went all the way from 95 bucks, right? And we're here at $95. We went from 1,400 pretty much to 95 bucks. Ideally, my best price scenario is about like $55 on Netflix. So I still think Netflix could come down. I'm not saying that happens this week, so no one hold me to the fire and say, okay. But we want to focus on paying discounted prices. You don't want to be buying names that are actually exuding areas where they can actually significantly pull back. You want to try to pay a discount, not a premium. And one of the main things that I've been trying to teach people is identifying where a company may be trading at a discount, or if it's trading at a premium, why you wouldn't want to buy, or if you are going to buy, know what you're buying, right? So I think that's, lo and behold, where a lot of people make mistakes at is they don't understand what they're actually purchasing and putting their money into. You don't know what we call the DNA. So now, when you are taking a look at a name like Netflix, right? When you are taking a look at, you have NFXL, excuse me. So I wanted to bring this note. This is what I wanted to say. So now you have NFXL, right? I was about to say NFL. All these doggone tickers, man, got you going crazy. All right, so perfect. So I wanted to bring up the 2X levered ETF of NFLX, right? Netflix. I see what they did. They just reversed it. Got me tongue twister me. But two things that I would say, right? Right. So when we do look at Netflix currently right now at $31 a share, NFXL, which is 2X, we'll just say 2X of Netflix, right? Let's stop getting tongue twist on that. Right. It's at $30 a share. Now, Netflix, where do we see them pulling back to? So now they're back to that same point. We go back to April of this year. Notice that the leverage product, which was right around 29 bucks, Netflix still has some more room to come down to get to 82, but it's only about $4 away on its 2X side from getting there. So ideally, I want you guys to pay attention to this. And this is this piece where I have to make this make sense for people. This is why I say not everything has to be about specifically an option, right? Because you can actually get this Netflix at once again, a pretty fair price. NFLX, if it can slide down, Netflix can pull back down. You can get Netflix lower, right? So the stock comes down to that $80, $86 range. Where am I looking to actually go ahead and pick up Netflix? Well, two reasons, right? Now, what's the why piece? Now, when it comes to financial education, stock market education, I find it when I talk to most people don't know what they're invested in. Most people just are invested in something because someone told them about a ticker, but they don't understand the why, right? So now you have a stock that has a 39 PDE. Netflix, if we go to statistics tab, and these are free resources to use, and these just give you a soft way of looking at companies, right? So once again, I go through and I want you guys to understand. Notice how I'm making sure you guys understand the why and the how. If you don't understand the why and the how, it is going to tick you off. That's why my education and what I'm teaching you is going to not just help you today or tomorrow, it's going to help you truly within the long run, because I'm teaching you something that you can utilize as well for yourself. And that's why I've been trying to get people to understand. Like, don't come here and think that you have to rely on me to give you everything forever. Mm-mm. This platform is available for you. These classes are running nonstop, right? Like, who's teaching 3 times within a day on a weekend? Me, because once again, I'm reviewing this information. This would be what I was doing anyway, right? Reviewing this information to make sure that I'm on point and on key and I understand things. There's a reason why there's stocks out there that I could highlight their financials and their outstanding shares off the top of my head because I'm reading and and finding this information and looking at it from a perspective of this is the things that I need to know because I need to know what my money is into, right? Because if I don't know what my money's into and I start to lose money, it is going to make me upset. And that's where a lot of times people make the mistakes of, and that's what discourages people because you don't know. There's just some things you don't know until you know. There's some things you haven't experienced until you actually experience. So use the mistakes in me telling you, right, hey, this is a mistake I made. You better not do it. Because hey, I lost 5,000 on this. I lost 10,000. I lost 100,000 doing these things and these mistakes. So the goal is for you to learn from the mistakes that I made and to learn from the good things that I've done as well too, right? The things that have been able to be beneficial as well too, right? To shorten your learning curve and your learning process, right? So when you look here at the statistics tab, there's a couple things that I want to make note of. So now you've had it to where back in the summertime, right? Right here at the close at 6/30, 2025, you had Netflix with a price to earnings ratio of 63, right? Now you have the price to earnings ratio of 39. So while the ticker has been coming down, right, it's basically erased $160 billion worth of market cap, while the company has actually been moving to the downside and erasing 160 billion worth of market cap, the stock has actually become a more valuable company. So this is an example of when certain stocks pull back, your dollars, of course, they stretch farther because now you can purchase more shares, but they actually become a better valued business compared to what price you're getting it at. So imagine if now, the stock is earning EPS wise $2.39 EPS. All you do is take the price and you divide it by the earnings. So let's say in the event that we start to get Netflix, we'll just say come down to $70, right? 70 divided by $2.39 is going to bring you to a 29 P to E. So that's how you would do it. You would say, okay, if the stock price is at 70 and the company is earning this amount of money per share, what would be their price to earnings ratio? Roughly, you would have almost a pretty much fairly valued right there at 70. So now you have the education to know where you bought. This is the mistake that a lot of times people are making. They're not knowing where they're buying. They're just buying because someone says something's the future. I can't even do what I just did with Netflix with OKLO. I can't do what I just did with Netflix with IONQ or some of these other names because they don't even have earnings, but yet their stocks have went up 500, 600, 700%. So everyone's looking for the quick fix. And what I'm trying to tell people is there's some stocks that can outperform the market for a short period of time, but eventually the market catches up to them. So you might see, don't get it twisted. You can see a nice 5, 6, even a year run, right? 5, 6 month, a year run on certain tickers, but eventually the market always catches up. Think about it. Not Palantir, Peloton, they caught up with it, right? Pelodoc. I'm just naming names that have had Beyond Meat at one point was running faster than the market. If we see what happened there. So GameStop, AMC, right? I'm just using different examples. So you always can see that the market can catch up eventually to these tickers. So what I want people to stop doing is stop chasing tickers. Stop chasing tickers. Stop chasing all of these different options. Stop chasing them. Stop chasing them. Sit back and learn for a second. Let me take you back here for a second, right? A lot of people is just trying to jump in, but you don't have the education to even know. If you asking about, are we still in? Did you take profit? What's the expiration date? If you got to ask what expiration date you should be buying, you probably shouldn't be trading options. I'm just gonna be honest today. Take the gloves all the way off. Because if you can't understand simple mathematics between delta to theta ratios, you are nowhere near ready to trade an option. Options trading is an elite sport. Options trading is something that takes time to actually grasp and understand. And if you don't know the variables at play, in my opinion, you're setting yourself up for failure because once again, you don't know what you don't know. If you don't know how to slice and dice these charts, if you don't even have a trading view set up and you're trading an option, you've already started this battle halfway backwards. Trading options without some form of a technical platform set up, and it's about to be 2026 and you still saying, yo, I'm trying to learn. What you waiting on? What you waiting on with the technical analysis? You got a whole technical analysis book. What are you waiting on? Right? What are you waiting on? Very, 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 very important. What are you waiting on? All right. Questions, 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 questions. If I'm teaching today, I want you guys to drop some fires in the chat. You got to talk to me. I'm here now. It's 9 a.m. Talk to me though. Talk to me. Let's not get quiet now. Let's not get quiet now. Talk back to me. Talk back to me. Stop chasing tickers. Stop chasing things that you don't understand. Start with these charts. Because now when you understand as far as what phase that you actually been buying something in, oops. What did I do? Is something my chart. Reset chart. Like I did something. I don't know what I did. Figure it out. All right. So yeah, just talk to me though. Talk to me though while I figure this out. I think I did something to my view. It's a full screen. I don't know what I did to this screen, yo. These computers, man, sometimes. There we go. Oh, yeah. Listening. Give it to us. Yeah. All right. Perfect. 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 So, and let me go ahead because I think I moved off of my ticker that I had. So, right now, let's get back to Netflix. So, let's talk about prices you want to buy at and be comfortable, right? All right. So, $80 is like that's a good price, but that's not going to be your best price. Ideally, I don't see your best price coming until about 55 bucks, right? So, 55 bucks is very, 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 very important. 55 bucks, right? So, you want to be able to get access into Netflix at those levels. I also think we should sometimes be comfortable. If you don't see a price that you would pay, it's okay to walk away, right? I think it's just like in deals, right? If the deal available for you right now doesn't make mathematical sense to you, what would you do? You would walk away from the deal. You just say, nah, that deal don't really make sense to me. Those numbers ain't adding up. And that's the same thing with these stocks. If the number's not adding up, the time to buy Palantir is not right now. This is not a time to, but hell no. I don't care what anybody says. You should not be buying Palantir at this time. This is not the time to be buying Palantir. No. I think it would be foolish for anybody to recommend. Now, could you trade Palantir? For sure, because you can trade anything. But would this be the time to be buying a business like Palantir at these levels and these times? And I've seen this plenty of times before, right? And I remember warning people back in 2020 and 2021 when certain stocks were running, because people still refer to these today, right? And they're always running, right? Running with these things. And what I tell people is never buy stocks with these high PDE ratios like this, right? Like I would not be telling somebody to buy Palantir at this time. I think it would be very, very foolish of me to tell somebody to go out there and put their money in Palantir, a stock that has been on this much of a run. Don't wait until your stock 10x's or 20x's to finally buy, right? That's not the time to buy. This is not the time to buy on Palantir at all. Right. So I just want to, like I said, I just want to make that pretty much crystal clear for people is this is not the time to buy Palantir. It's also not the time to buy anything that's within the quantum space. This is not the time that you buy Palantir. This also is not the time that you buy OKLO. I'm gonna tell you this right now. OKLO will come back down to 40 before it goes back to 200. And it probably won't go back to 200 anytime soon, if ever, right? I won't say never, but I'd be surprised. There's certain names that, once again, they don't have high asset allocation, right? And so, right, they do not have high allocation. And so when they do not, right, you can actually see a name like OKLO right now, once again, is just trading right here within a range, right? It's range bound for right now, this second. So now it's trading within the same range, within this $30 window on range. But what you think is going to happen once this thing breaks underneath 80 bucks? There are no earnings. You don't know what you're buying. I can tell you that a lot of people are never taking a look at the statistics tab. Because if you did, you probably wouldn't have your money in half the things you have it in right now. Oh, I'm really talking to that. There's a bunch of blanks. So that's just like you go in and you trying to buy a business, but you don't even know. You try to buy a business right now. Take it in real life. You go to your local restaurants, you go to your local businesses within your community, and you say, "Hey, I got some capital. I'm trying to buy into this business." And you say you want to take over this business, and they say, "Hey, we're gonna sell it to you for this cost," but they don't show you no earnings. They don't have nothing to really show you, but the price tag. That's about it. And that's what this market is full of, is companies that just have price tags with nothing really to show you. So you're buying the hype of whatever they're selling you. Oh, we're going to do this in 2027 and we're going to do this in 2028. So you're buying all the hype. And that's what people do. That's what people do in the market. That's what pushes these stocks consistently to the upside. People are buying the hype, right? And so what I need you guys to understand is that the benchmark P/E ratio is 15 to 30. Usually 15 to 30 is going to be your benchmark P/E ratios that you want to be paying attention to. So 15 to 30 is ideally where you want to be paying attention to benchmark P/E wise, right? So those are your benchmark numbers, 15 to 30, right? So when you are looking at the P/E ratio, price to earnings ratio, 15 to 30 would be ideally for you, right? So a name and a ticker like OKLO, they don't have any PDE because they don't have no earnings. So a company like this is trash. This is what we call hard garbage. This is what we call trash. They don't actually have any earnings, right? And so you would get caught up and you would say, nah, I'm not going to actually touch this ticker right now. So 15 to 30. This is why, once again, the education piece is important. So for people that have questions, this is why you need to be in this community, because you need to be on these calls tonight, Monday and Tuesday, actually learning and getting education. So many people are just trying to get tickers and you're trying to get plays, but you ain't trying to learn. You got to be willing to learn, right? You got to be willing to learn. And if you don't learn, you're not going to earn. That's just the reality. If you don't learn, you won't earn. That's just the real. So a lot of people is looking for the answers, right? But you not actually trying to actually invest time into learning. So when things happen, why did this fall? Why did that fall? Why did this? You don't understand the why. And I keep preaching. That's what I'm teaching you, the why, right? You got OKLO there, right? $87 here right now. I would not touch this company because you don't have anything to quantify this off of. You don't have nothing to quantify this off of at all. This is hot garbage. This is trash. Trash tickers can run. And we covered that yesterday inside the community as to why. Trash tickers usually can run because you have your Wall Street bet boys, you have your Reddit boys, and you got all these people that like to pump and dump things. And so they've gotten the thing about technology is technology makes things more transparent, right? So more people can see things, right? When you are taking a look at, the short shares outstanding, when companies are being held short, you have these groups that are targeting saying, uh-oh, we see this institution is over leveraged on the short side. We see this company, uh-oh. So they started to get to pumping. And all of this was fake and fictitious. Everything that got added into OKLO was fake money. Well, I would say fake money, but it was fake from the standpoint of it wasn't really people necessarily really buying. It was people having it cover on the short side. This is why you could see here in September when it shot up so fast, a lot of that came directly from short covering, right? So short covering is a major reason why we see a lot of bad companies in the stock market today actually run to the upside due to short covering. Very, very, very important. And a fun fact, just to let you guys know, Tesla would have never ran up the way it did had not as many people been shorting the company. So Tesla was actually one of the highest shorted companies back in 2018 and 2019. And it squeezed people. That's why people got crushed. If you look back on the charts on Tesla, I'm going to show you when the short squeeze actually happened, right? So the short squeeze started to take place on Tesla. I'm going to show you here, right here in 20, right here. This is where the short squeeze started to take place. Oops, 2019. There we go. Right. So this is where the short squeeze started to take place. Tesla went from 14 to hitting almost $1,000 a share at this point in time, right? Relatively quickly here in January, right? So Tesla went up very, very fast, very, very fast. They've done splits, so you wouldn't be able to see the pricing from, but you'll notice that here in June 2019, stock price started to soar. It was $13 a share, but then we shot all the way up there to the upside. So this is why, like I said, this is what I want to stress to everyone who's listening here, that's paying attention, right? Very, 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 very important, right? So very, 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 very important for you guys to understand short squeezes, right? And that's what you have happen here. This was essentially a short squeeze on Tesla. So this short squeeze on Tesla shot us up to the upside. We moved at a very significant pace, right? Here on the up and up. Um, so that's my thoughts. So companies like Tesla, they actually had numbers, but just a lot of people actually were betting against them, right? And we see where Tesla's at today. Right. So a lot of that in the beginning was the main reason why we saw that major move to the upside. Next thing we want to talk about is, okay, let's talk about a company that maybe you want to acquire, but the price ain't right yet. But let me give you this example. So A-Lab, this is an example of a company that you may come across and you say, okay, Astria Labs. I want to acquire the name, but I know it's not at the right price. All right. Because here at 122 price to earnings, and the company's only earning $1.22. This is trash. Sorry about this, A-Lab, because I like you. But this is a recipe for disaster. And this is how you lose. This is how people lose their money. And I'm about to teach you that right now. That's why I say everything is not about an option, because you have to understand where you're buying. You make your money on the buy, not the sell. Listen to what I'm saying to you guys. You make your money on the buy, not the sell. I want you guys to put that in the chat. You make your money on the buy. Same thing in real estate. You don't make your money on the sell. You make your money on the buy. When you sit at the buyer's table, you make your money there, right? Where you buy the asset at is where you actually make your money. Now you got to ask yourself this question, right? And I want you to take a look at the last part of this year, right? You make your money on the buy. Want you guys to put that in the chat, right? And so when you see that, and for questions about vocabulary stuff, education. This is why I say education. There's no way I'll be able to teach everything I know vocabulary and principle wise on this live. But what I can do is invite you to make sure that you tap in and join. This is why education is important. I need everyone to put that in the chat. I don't see enough of it in the chat. You make your money on the buy, not the sell. You make your money on the buy, not the sell. What's going on, Ishmael? Ishmael knows exactly what I'm talking about. Big real estate investor. Ish, what's going on? And Ish tapped in with me. He joined the community. Ish to tell you. He tells that he I know he doesn't mind me sharing because he's shared with other people. Since Ishmael got with me, he got 3 houses. He picked up 3 more houses. Picked up 3 more houses. So I'm just gonna subtly just put that out there. Right? Coming into this program, learning how to churn and make this money, right? Is put him in now. He's getting more real estate deals. So this is why I want to stress to people, right? The value's here, but are you listening really to me, or are you just having me on as background noise? It's 9:15 in the morning. You could be ready to get to do some things, but are you just having me on as background noise? That's the question I got to ask you, because now you could be out here buying tickers and not knowing where you're buying them. A-Lab, you would not want to touch this ticker, in my opinion, until it broke less than $60. So someone might be saying, well, man, this company's at $148. What do you mean? Okay, well, this stock is only currently earning about $1.22. So ideally, if I was to take and go and even do 60, right? I would say 60, divide that by 1.22. That gives me 49. So that would take the P to E ratio from 122 to 49. So you don't want to get caught overpaying, but then also there's a forward PE. So now this is where I'm about to make you work. You always have future earnings expectations more times than not, right? For the most part. So you have these future earnings expectations, which you have a forward PE of 63. You have a lot of people that focus on buying tickers, right? And so just listen to this for a second. You have a lot of people that actually focus on buying names, right? That have future earnings expectations. So a lot of people want to buy what? The future earnings expectations. So what I want to stress to you guys here today is do not get caught in buying and becoming somebody's exit liquidity. This is what happens once again a lot when you don't know where you're buying. This is where you can make the mistake. Now you might be saying, well, how did Astria Labs fall 14% on Friday? Remember, this is not a stock that sits what? It doesn't sit high asset allocation in any ETF. So when these stocks don't sit high asset allocation in any ETF, what ends up happening? The stock ends up what? On any red day on the NASDAQ, it's bound to fall at least 10 to 15% because there's not a ton of real money in this thing. When push comes to shove and people say, hey, am I going to cut Apple or am I going to cut Astria Lab? When you're in a time of need, you don't get rid of what you know you need. You know you need Apple. You don't need Astria Labs. So you're going to cut this thing quick, fast, in a hurry. You get it up out of there. Remember, this was just a company that back in September of 2024 was worth 8 billion. No disrespect to them, but they're new to this and not true to this. And that's what we have. A lot of companies that are brand new to this and not true to this. And I've seen this happen before in the markets. I remember vividly 2020 and 2021, I had to keep warning people, stop buying tickers, right? That are at peak points and people are pumping because what is the future today will to be tomorrow's past. And I'm going to say that again. What's quote unquote the future today will be tomorrow's past. And I've been through this a few cycles. So, I've broken this down. At certain periods of time, you always see, these pump cycles that actually go ahead and come in. Pump, 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 right? You always have these pump cycles that always come in where people say, well, this is the future. That's the future. This is the future, right? So let me go through because I actually have, an actual main thing where we talk about the raw truth and just really the future, right? A lot of people said that this was the future, that was the future, right? And then ultimately, all those things ended up pulling back down. EV was the future. Your job was to find the next Tesla. Well, damn it, you still ain't found it. Rivion's trash. All of them companies is hot garbage. Neo's trash. XPEV is trash. All of those companies is trash. They trash. XPV, Neo. That was supposed to be the next Tesla. Let me show you what Neo's doing. It's in a toilet bowl, $5 a share. But let me show you something. This is how they get you. I'm teaching you for real today. I took the gloves off. I've had enough of this. I just want to give you everything, once again, everything that I have. This is hot garbage. This is what you call trash. And I'm just showing you the cycles here. You can take a look. These is just the facts. The future, 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 the future. Oh, okay. Well, lo and behold, $66, never been back. And you're looking at Neo, and yes, it's trash. Neo, why is it trash? Unprofitable business, losing $1.63 a year. So this is why I say it is very important. What can I even make from an evaluation perspective? You got nothing to show me. You don't even have no forward expectations. So why would I get involved here? Why would I get involved in something this trash? This is absolute hot garbage. This is trash. It's just what it is. Hot garbage. Now, Neo ran up very quickly, right? It had its time and its run, but it's not going to run again. The only way that Nikola is trash, right? All of those names is trash. Rivion's trash. All of those names are absolutely trash. All right. So you got Neo here, trash. Rivion, let me just show you. And this is what happens when you don't have the education. You have people that was pushing. Here's the narratives that are run. Well, Amazon got their money in Rivian, so you should too. Well, hold on, wait a second. Last time I checked, Amazon got a bazooka boatload of cash. So they can go put their money in Rivian, and that'd be like a little tax write-off for them. Or that'd be like a little blowaway money for them. That's a little play money. You don't got time to play around with this thing. This is the same reason. So yes, Rivian is hot garbage. I don't care what no one says, it's garbage. Now, could it go on a run? Maybe. Ain't going back to $200 a share. That ain't gonna happen. Rivian was costing more money, right? Rivian was costing more money than how many cars at this point they actually had out. But this is why I say to you guys, man, pay attention, right? And focus and lock in, right? Very, 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 very important. So you're looking at Rivian here, right? Rivian is hot garbage. Stop buying these tickers that are trash. That's what I want to stress to you guys here, right? Stop buying these tickers that are hot garbage, right? Stop buying these stickers that are hot garbage. Don't do it. A lot of people, you guys are paying too much for the wrong tickers. Remember, this is the future. Next thing I'm going to use PayPal, XYZ, the easiest examples. Trash. Trash, 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 trash. Garbage. Just what it is. Trash. Someone take them out, please. Trash. The same chart. But remember, PayPal was supposed to be the future. Man, PayPal can't even. Oh my gosh, this is trash. We still waiting on XYZ. What the hell they doing? They in the toilet bowl. They both doing the same exact thing. Both companies is trash, right? So super, super, super duper important. I see a good question that came in, and I actually want to cover it. I think it's Michael White is asking a really great question, right? And yes, Michael, I also just sent you a message back. So the answer to your question is yes. I got you, bro. I just seen your message just now. Apologies on that. So PayPal and XYZ absolutely hot garbage and trash. You can see that pretty much here, clear as day. Right. So what I want you guys to do is I want you to share this live with 3 people this morning, right now. 3 people this morning. The more people that we share with, the longer I stay on. Less people, easier it is for me to shut this thing down. But if you're learning this morning, right? If you are learning this morning, I want you to drop some fires in the chat, and I want you to share this thing with 3 people. Right? That's what I want you to do right now. Share this thing with 3 people. All right? Share this thing with 3 people. Share this thing with 3 people. All right. So Michael asked the question as far as Carvana. Yep. And if you're not inside the community, that's why you need to be in the class tonight. Because I'm about to give Michael the answer in less than 2 minutes as to why Carvana ran back to the upside. So ticker CVNA. So let's talk about it. So one of the main reasons why Carvana did is because Carvana was one of the heaviest shorted tickers at the time, right? One of the largest shorted tickers when it fell in 2022 and 2023, right? So there was a point where Carvana was on the brink of, filing bankruptcy, right? So Carvana almost wouldn't even exist right now if it wasn't for the revelation on how they came back, right? So when you look at Carvana, they're a low floater. So 116 million shares outstanding. This is a low floater. Now, you can still see, even to this day, this just lets you know, they're still at a 9.7% of their shares outstanding being held short to this day, right? And that was updated as far as 11/28. So what I need to stress to people is, once again, you see this major move to the upside on Carvana largely because so many people were shorting the company and was not expecting them to actually be able to bounce. Now, Carvana actually was able to go ahead and do that, right? So if you look in the past 12 months, year over year, they have a 77% earnings growth. So Carvana is actually the definition of a company that at one point didn't have it, but actually was able to develop in a company that actually has it now. And it's not a bad company. You're earning, a pretty decent amount of money. This is not an extremely high P to E business, but this company has came out at one point. They had no cash, all debt. They're working their way out of that debt. This is a stock that, which is why they've actually gotten added into the S&P 500. They've had a resurgence and a comeback. Are they trading where they should be? No, but it's a company that's earning $4.42 EPS in the past TTM 12 months. This is a good business. This business has actually rallied themselves and came back. So that is the main answer, right? That we are actually able to see, right? So if you are able to, pay attention here on Carvana, right? Major move that actually took place and happened. But this is a company that actually had the numbers. You see the differences when you actually deliver and have the numbers. Very, 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 very important. Yep. Mm-mm-mm-mm-mm. So that's the answer to you. Yep. That's how it was able to rally up here to the upside. Yep. Michael, so answer your question. Good question that was asked. Good question that was asked here. Good question. Get your questions in. Mm-mm-mm-mm-mm-mm-mm-mm-mm. Questions, questions, questions. Now be the time to get your questions in before I move on. Time we got 9:30. Got probably another 15, 20 minutes with you guys. Got to knock out a couple things. What time did we start this? I think we started this about an hour ago. Mm-mm-mm-mm-mm. Questions, questions, questions. Drop some comments in the chat. Share this thing. Okay. So I'll get VRT. What are my thoughts on VRT? Let me help you out real quick. Hold on one second. Um, where's my, there we go. I'm glad you asked me about VRT. So VRT, I will tell you, someone said, I feel like I'm trying to drink from a water hydrant. Try for sure. TTD, just a quick answer on that. So TTD is in a 5-year demand zone. So this is a really good spot to get it at. I think the lowest it'll go is around like 29 to 30 bucks, but TTD is in a 5-year demand zone. As far as VRT, right? That was the question at hand. When you are looking at VRT, first thing that I'll highlight with VRT is, of course, the move from April going from 50 to 160. To me, I never like buying tickers that go up 200 to 300% relatively quickly. Cannabis, I think, is all smoke. I wouldn't get caught buying those loss-making businesses. They don't make any profit. We want profitable businesses. If I look at the cannabis businesses, they're not profitable. Right. So I would avoid the cannabis industry. Well, that was another sector that was supposed to be the future. And here we are in the future. It's 2025. From 2015, we were hearing future, 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 and it never materialized, right? So very, 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 very important to make that note, right? Now, when you are able to look at two things, right, that I would say here on VRT, you currently got a 61 PDE. The one thing that you should always do is go and see what the forward PDE is. In this case, the forward PE is 30. So what does that mean? There's an expectation that earnings are actually going to grow. That's the expectation, right? That earnings are going to be able to grow. Can you analyze the DNA of TTD? That'd be something I'll do in-house. I can't do these analysis on TTD, but you guys are more than welcome to tap into the community. Go ahead and get your access into this community. I'm not going to break down all of these tickers on live for free. I'm going to just tell you that right now, but I am giving you the blueprint of being able to do this thing, right? So you got the trailing P to E right here at 60 and 86, right? Now, forward PE of 30, right? So forward PE of 30. So what does that mean? If you come here to the analysis tab, you'll see Next year's earnings are projected, next year earnings are projected to be $5.28 EPS. A year ago, they did $2.85. So this is a pretty good, in a 2 year span to be able to almost double your earnings expectations. That's pretty good. So this is one of the reasons that people are buying VRT is because they're buying it off of future expectations. But it's always good to analyze upfront. Why are people buying? Right? Why are people buying? So I do think this is very, 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 very important for you guys to know is understanding the why did the stock go up. So this stock is essentially went up from this point because of the future earnings expectations. Maybe not all of what they're doing today. Once again, people buy companies because of future earnings expectations. Do not forget that. That's the reason why people put their money into stocks because of future earnings expectations. Companies like to trade forward. So keyword forward price expectations. That's the main reason that we see this move, right? So when you are looking at VRT right now, I would roughly say ideally around like $100 would ideally be a good entry price on VRT. So right around $100 would be a really good price on VRT. Yeah. Mm-mm-mm-mm-mm-mm. Caterpillar, and for my people that's in the community, how long we been speaking about cat? How long we been speaking about cat? I see people asking about cat. How long we been speaking about cat? Going to make the move that they're going to make. In my opinion, Caterpillar is going to be right there pushing to the top of the DIA up there with Goldman Sachs and the rest of them. Caterpillar is in a really great position long-term investing wise, right? So Caterpillar is all gas, no brakes. And they'll be one of the main reasons why the DIA will go above 50K. So we really like Caterpillar still long-term, just print money, Goldman Sachs, GS, those are our main go-to tickers, right? So the DIA, we actually just covered them here on the watch list. But Caterpillar, yep, all gas, no brakes. Expect more. It's funny enough that Boeing, of all companies, Boeing should be in this conversation. Boeing should be in the spot that Caterpillar's at. But yet, they're at a spot that Caterpillar used to be at. Let me show you. Just want to do this quick comparison for you real quick and show you exactly what I mean by that. There was a point in time where Boeing, let's go here to this monthly. Now think about this, right? This was back in 2019, right? Where was Caterpillar at in 2019? Right here, 2019. $150. Where was Boeing at in 2019? 450. Lo and behold, we zoom out. Caterpillar's at $600. Where's Boeing? $200 a share. Absolutely crazy. Absolutely crazy that Boeing, because of all their issues, they could never just seem to get themselves right. Right? They could never seem to get themselves right. And the amount of companies that have passed Boeing, which Boeing at one point was right there with United Health. And when we speak about United Health, funny enough, I'm bringing them up. Next year, a lot of people ask me about NVO and UNH, right? When you take a look, you want to once again focus on paying a discount. All right. So Caterpillar and ticker BA, just look at that comparison there. All right. Now UNH is back down here, very, pulled back this year to the lowest level it had been at since 2020. So UNH, that heavy resistance level is going to be 440. You guys can put that down on your notes. $440. That will be the heavy resistance level that you want to pay attention to. $440. All right. So very, 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 very important. So yeah. Uh, 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 uh. Any questions? UNH, we anticipate them to break back out to the upside, right? So on UNH, if we can see a major move back over 340, I mean, excuse me, back over 440. We'll see a move back on the upside. Starts with us getting back above 400 first, of course, 404.40. Yep. I think you want to, on UNH, this is to me probably one of the easiest recovery plays of the decade. If you don't think UNH can recover, I know they went through a lot. I know they got beat up pretty bad this year, but UNH is in a prime opportunity. Once again, focus on paying what you're paying for the business. A lot of people are buying. I mean, UNH is a company with a 17 PDE. They've almost earned $20 EPS in the past 12 months. And that's still with all the stuff they've had going on. So I just want you to keep that into perspective. Focus on the business, not the price so much all the time. Focus more on the business. That's what I want you guys to take away from this. Focus more on the business. A lot of times we're not focused enough on the business. We're just focused on pricing. I will tell you this, prices will have you lost in the sauce. Focus on the value. The same way when you go out here shopping, you focus on what is the value of the product, right? What is the value? Focus on the value. And I think there's a lot of times where people are not focused enough on the value. You're just focused on the price. You're solely focused on price. Focus on the value. What value are you getting out of this investment? If I put my dollars here, what value is it going to make me? What value does it bring back? Am I paying an overvalued price or an undervalued price? When I highlight tickers on like Coinbase and I say, hey, don't get it above $200. Or if I highlight tickers like MicroStrategy and say, hey, wait until MicroStrategy comes down a bit more, especially as Bitcoin pulls back. It's focusing on what the value proposition you're going to get at those levels and those prices, right? So focus right there on the value, not as much the price, right? Price should come last. It's about the value. What am I actually paying for this business? And if I'm overpaying, don't get caught overpaying. And I think a lot of times you guys get caught overpaying for businesses. Don't get caught overpaying for these stocks. When certain names enter distribution phases, that's where you're going to see significant pullbacks. The time, for example, I'm just thinking of just tickers, right, that people ask me about. Like, for example, Shopify. You shouldn't buy Shopify today. I'll just tell you that right now. I know this company enough to tell you now ain't the time to buy this name. The time to buy it was when it was at 20 bucks, 30 bucks, 40 bucks, 50 bucks. That was the time to actually go ahead and buy that requisite ticker. This is not the time to buy Shopify. You don't buy tickers at all-time highs. You just don't. It's never really been a good recipe, especially companies that are forward trading tickers, right? Especially companies that are forward trading tickers. Very, 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 very important. Very important. Do not just buy companies that are forward price businesses without knowing what you're getting yourself into. Know the DNA. I want everyone to put in that word DNA. This is exactly what we're going to be talking about tonight. We're going to have about an hour and a half masterclass here tonight. So I'm going to go ahead. It's 9:40. I'm going to make my last call for questions. Last call for questions. Q&A questions. But this is why you need to understand what you're putting your money into and what you're buying. Last call for questions here today. You need to put DNA in the chat. Everyone, I want everyone to put DNA in the chat. Also want you to put down on your notes, you're not going to put your money into anything without knowing what you're putting your money into anymore. That's one of the greatest mistakes that I think a lot of people are making. You're putting your money into instruments you don't fully understand. And that's why I titled this live, why everything is not about options. You got don't lose sight of the discounts that are being presented because you're so caught googly eye with the options piece. You're so caught with option. Focus on the DNA. Focus on the DNA of these investments. You have now a ton of companies that have 2x levered, right? Now let's talk about SNDK, SanDisk Corp. These are just like the classic things that SNDK. And I like SanDisk. I ain't knocking them. Oh man, it just no disrespect to Sanders because I actually like him. I like Sanders. I like Sanders. Right. The question is, can they justify this move though? From September, you went from 50 to 200. At one point, you was almost 300. Man, you you know, you definitely gotta pay attention, man, because this is where you could lose sight of. I would definitely pay attention to SanDisk. I mean, I can't even give really too much price on where I would buy this name, but this is like an example of a stock that I just look at and I say to myself, this is what I always highlight. When people get up caught overpaying for tickers, you should not even think about a SanDisk right now. You should not even think about a SanDisk. We just covered UNH literally like 2 to 3 minutes ago. So SanDisk Inc., SanDisk Corp, excuse me. This is the prime example of companies just debuting on the stock market running, and then they pull down to get clapped. So let's see if it gets clapped. CoreWeave. Remember, there was this hype for CoreWeave, right? And I've been telling people, don't touch this ticker until it gets below $50. And I still remain saying the same thing. Circle Internet Group. Don't touch that company until it gets, I would say, below at least $50. Right? Circle is right now here at $83. Right? So when you are looking, I wouldn't touch these tickers at all. Why? Because I don't have enough to quantify them based upon. If you think about this with Uber, right? It took Uber really 5 years to actually gain some rhythm on the stock market. So we go through these cycles where we have these new IPOs that come to the public markets and they really just dump on retailers, retail investors, right? But like new IPOs, those are the things you should probably be afraid of because that's where the pumping and dumping is happening. They're pumping in the pre-IPO market and coming to the public markets and dumping on you. Jay Wig told you. Yep. So focus on paying discounted prices and identifying what is a discount. Identifying what is a discount. And that's what we're teaching you here right now. You can use everything that I taught you so far here today to be able to identify truly what does a discount look like? What is a discount? That's what I want you to think back and consider to yourself. What is a discount? Let that let that marinate, let that sink in, right? So, any questions from anybody? Any questions? Questions, questions, questions. Speak now, forever hold your peace. We will have a live class tonight. This is why you need to be in that class. If you're not in that class tonight, it starts at 6 p.m. 6 p.m. All my classes are recorded and you have playback capabilities. I can't speak to anything else, but we have those playback capabilities. So if you want to join, make sure you are on. Um, all my members, make sure you guys are on at that 6 p.m. time slot. 6 p.m. time slot, Monday and Tuesday as well, too. So this is our beginners week. So this is everything that I need for you guys to actually break down and go through. I see a question about Snowflake. I'll cover them. Long-term investing wise, Snowflake, forward price business. So you don't never want to pay a premium. You always want to pay discounted prices for these names. Focus on paying discounted price. Discounted prices. That's a Snowflake is losing $4 EPS, but there's a projection for next year that they're going to turn profit. So in the past year, they've been losing money. So this is why Snowflake ran so much this year, is because a lot of people believed that they were going to see Snowflake actually be able to move here to the upside. All right. So once again, very, 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 very important that you guys take this notes down. Focus on paying discounted prices. And if something is losing money today, it doesn't necessarily mean they're going to lose money in the future. All right. So very, very, very important to know that. It doesn't mean they're going to lose money in the future, but they do. It gives you a good analysis of where the company is coming from. Loss-making businesses can run on Wall Street. There's a lot of loss-making businesses that make a lot of people a lot of money. Just because something's loss making doesn't mean that you can't make money trading it or investing in it. But it has to be, you have to pay attention to where you're buying the company at. Do not get caught overpaying for tickers. And I want to say that again. Do not get caught overpaying for these tickers. And a lot of times people are getting caught up buying at the wrong times and they're getting caught up overpaying for equities. Do not get caught up overpaying for these equities. So, just some notes that I wanted to make to you guys today. Don't get caught overpaying for these equities and these premiums on these businesses. So, crypto, is obviously different to evaluate, but the main things you should focus on is Bitcoin because Bitcoin controls everything. Bitcoin goes up, it leaves room for the altcoins to go up. Bitcoin goes down, those altcoins come down. Right. So, last call for questions. See someone say, thanks, see you tonight. I will see y'all tonight for sure. All my community members, be on. If you're not inside the community, this is why you need to be inside the community. Gave you guys a preview today. Tonight's class will not be on live or will not be on YouTube. Classes will not be on YouTube going forward. I did this. I will do YouTube lives from time to time, but all my classes will stay in house. All recordings will stay in house. But the why, this is the main thing. The why factor has to be known. You must understand and know as to why something and why and how. The why and how is important. A lot of people don't understand the why and the how. That is the important piece here on Wall Street is understanding the why and the how. So just wanted to make those notes to y'all. Don't lose sight of things. One step closer. So lock in with me. Make sure y'all ready to go. And yeah, that's pretty much that. Anything else? Got to, man. Just trying to make sure people know and understand the information. This is nothing, like I said, nothing to play around with. Nothing to play around with. Any questions? Questions, questions, questions. Yep, 6 p.m. Questions, questions, questions. Yep. And I appreciate all the new people. Shout out to all the new people that's coming. So your name, email, and number, and I'll send you over the information. You could send me a DM or you could send me a direct message. Name, email, number, send me a DM. You want access into this program, send me a DM, your name, email, number. Get access today. We'll be live at 6 p.m. The Zoom code is already in the community. So Zoom code is already in there for you guys for 6 p.m. tonight. So all you have to do is just click on the link. But questions, questions, questions. Uh, questions, questions, questions. No more ticker questions. Questions about the program. Questions from today. No more tickers at all. But this is why you guys need to get in. For my community members, if you got questions about something, send me a direct text. Now be the time to do so. Once I get moving, I won't respond for the rest of the day until class time. So now's the time while you have me, use me as a resource. Don't wait until another thing I want to say. Don't wait until something go wrong to text me about it. Don't wait till something go wrong. That's another thing. Don't wait until something went wrong when you could have texted me right now. Right. So this is what I'll say. Right. Do not wait until something goes wrong to text me about something. Very, 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 very important. I make that note. Don't wait until something goes wrong, or don't wait as well. Don't wait to lose 10, 15 grand in the market and then say, L, now I want to learn. Come on now. Take the opportunities now. If you serious about learning this information, education is in abundance. Education is in abundance. Very, 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 very important. So super, super, super duper important. Yeah. Mm-mm-mm-mm-mm-mm. Uh, don't wait until something goes wrong. Just like, I mean, shoot, just like your car. Get your maintenance on your car early. Don't wait until your car, something go wrong with your car to say, hey, now I'm gonna take it to the shop, but you ain't get the oil change. You ain't do none of the maintenance on the car that you should have done in the first place. You waited until something went wrong. Say, oh man, now I should have done it. But you ain't checked. You ain't checked the battery. You ain't checked the oil. You didn't do your analysis, right? But you waited, and now you're in that position. So don't wait until something goes wrong. That's what I want to say. Don't wait until something goes wrong. It's not the thing to wait until something goes wrong to say, "Oh man, why I did that." What I'll say also as a warning: don't be buying at all time highs. I'm gonna keep saying that. Don't be just buying, putting your money all in at all time highs. Really take this thing seriously. This is your money. This is your money. Know what you're putting your money into. Know what you're putting your money into. There's a reason why Lululemon Athletica popped on Friday. Well, Thursday night into Friday. There's a reason. Lululemon is trading at its cheapest point in 5 years. Investors said, this is a good opportunity to buy. That's why. That's why Lululemon wouldn't break underneath 160. So have the education of knowing the DNA. I'm going to give you guys one for free. I'm sorry. Some people may be mad at me. All I'm going to say is buy this ticker and hold for the next 5 years. Oops, my bad. I ain't mean to say nothing. I'm just talking, man. I'm just giving you guys. I'm just giving you guys something free. Yeah, I'm just giving you guys something free. Just giving you guys something free. What is a good buying zone? I guess that's about a good buying zone to me is when you have price that's sitting in demand and when fundamentals can match up with the price. That's a good buying zone. But something's within an accumulation phase, I think is a good buying zone in a nutshell. But I'm just gonna say it now. End phase, my bad. I just put a ticker up on the board. It's gonna 3x. Oops, my bad. I didn't mean to say that. I did. Oops. So you see that here. Look at that. Look at that. End phase energy. Just take the notes down. Just take the notes down. Stock had a rough 2025. Look at that PDE. Look at those earnings. Listen to the last earnings call. That's all I'm gonna say. All I'm gonna say. I just threw you guys one off the backboard. It's up to you to catch it. Up to you to catch it. Pick that name up. One thing I want to go over is Kava as we get ready to wrap this thing up. Kava. So when you do take a look at ticker CAVA, remember when Kava was at 120, 130, and everybody was like, I want Kava, I want Kava, I want Kava. Well, now you got it at $50. I kept telling you guys over and over again, focus on paying discounted prices. Discounted prices, guys. Focus on paying discounted prices, not premiums. Kava, perfect price, $30. $30 a share, perfect price. So you want to buy a business at a discount. You don't want to pay a premium. And a lot of times people are getting caught paying premium prices for the wrong businesses. You can get away with maybe paying a premium for the right one. The wrong one, but focus on paying discounted prices. Yep, I like that. Mm-mm-mm-mm-mm-mm. All right, so wrap this thing up here at this time. I'm about to go ahead and get busy. But yeah, for anybody there, questions, joining the community, you can direct that all there, 716-930-6783. So 716-930-6783. Go ahead and get yourself in this community. My community members be on Zoom promptly at 6. We'll start, and I'll have you out before Sunday night football gets kickstarted. Back half games before we will wrap. I do like to do this. I did say I would continue to do this, and if right, so we got. I just want to pull up. Ah, there we go. Perfect, perfect. That's what I wanted. All right, so we got these. I said I would just give y'all the games, my thoughts on each game. So we got the 1 o'clock. I'm only gonna do. I'm actually gonna do 1 o'clock and 4 o'clock games too. I'm gonna do 1 o'clock and 4 o'clock. All right, so we got Bills and Patriots. We'll get this rundown today. We got Bills and Patriots. Um, this is a tough one. Tough one. Tough one. Tough one. I'm gonna go Buffalo on the road today. I think they just find just enough to win, right? Just enough to win. I think this is a really tight game, but I think just Buffalo finds a way just to get a win because I think they desperately need it against New England. Because obviously, New England wins this game, they pretty much will have the division on chokehold. They already have it pretty much now, but they win this game, Buffalo's not winning the division. So, division is pretty much on the line. I just think Buffalo's motivated enough. Baltimore and Cincy. Cincy won the first game, and they was on the road Thursday night. Joe Burrow came back. That was Thanksgiving. Baltimore's had some struggles on offense. You guys know I love Lamar. I also like Joe Burrow a lot, and I also do love Jamar Chase. This one's a tough one as well. Yeah, I would just say this one's really tough. I would say 6 to 7. Yeah. Um, 6 and 7, but this one I'll say Cincy. I'm gonna say Cincy today at home. I'm gonna say Cincy. I got Buffalo, Cincy. I got the Jags. That's no question. Sorry, Jets fans, but I got the Jags. I think you guys are starting a first time QB as well too. First start too. So, yeah, that's the wrong way to go on the road. But yeah, I think Justin Fields is hurt and Tyrod Taylor's hurt if I'm not mistaken. So I got Buffalo, Cincy, Jacksonville. Then you got Chargers and KC. Shout out to all my people in LA. You got Chargers and KC. I would say roughly, there we go. I would say ideally, KC at home is tough. I'm gonna take KC money line. Season's on the line for them, so I'm gonna just go KC. So you got Buffalo, Cincy, Jacksonville, KC, Arizona, Houston. I got Houston, Stroud, Ohio State, Cleveland, and Chicago. That's a You guys know I'm a bias. I'm a Shedeur fan. But yeah, I just see that's a tough place to play. But you can give me Chicago. All right. So I got Buffalo, Cincy, Jacksonville, KC, and I got Houston, and I got Chicago. The Giants and yeah, I'll just take the Giants today because I don't Marcus Mariota's playing. So yeah, I'll just take the Giants and Jackson Dart. You got Philly and Las Vegas. I'll take Philly. Then you got Seattle and Indianapolis. I'll take Seattle. Phillip Rivers, yeah, you can't just come off the couch. That's the wrong game to come off the couch. That Seattle defense is serious. So I got Seattle, Denver, and Green Bay. I got Green Bay. Tennessee and San Francisco. I got San Fran. Carolina and New Orleans. I got Carolina. Detroit and LA. Mm, That's that you could throw that one up. I really can't decide on that. You could throw that up either way. I could make a good argument for both teams. I say whatever team got the ball last for that game. Whatever team got the ball last for Detroit and the Rams, that'll be the team that wins. Whatever team got the ball last, because I think that one would be a shootout. But you know what? I'll take the Rams at home. I like the Rams at home. Rams at home, Carolina on the road, San Francisco at home, Green Bay on the road, Seattle. Go ahead and give me Seattle at home, Philly at home. You can give me Giants at home, Chicago at home, Houston at home, KC at home, Jags at home, Cincy at home, Buffalo on the road. So that's pretty much your games of the week. All right. So those are going to be pretty much your games of the week. So just gave y'all those are just my thoughts on the games today. So it's 9 degrees in Chicago. Golly, cold as hell. Yeah, cold as hell. Mm-mm-mm. All right, y'all. So I appreciate y'all, and we'll go ahead and wrap up. So y'all have a good one, and I'll see you guys tonight. Be blessed. Peace.